Well, regular listeners will know that we're running a series on India and how to invest in India and the various different aspects of investing in India. And I'm joined now by Binu Thomas. He is the international editor of financialradio.co.uk. He's based out in Bangalore and is an expert on Indian investments. Binu, good to have you with us today. Tell us a little bit about India's benchmark Sensex and what comprises the Sensex, because it's been a very strong performer, hasn't it, over the last few years?
Yes, that's right. The Indian Sensex has been on a roll for the last 3 years or so. The term Sensex itself comes from Sensitive Index. It's a sort of it's an abbreviation of Sensitive Index, and that's what Sensex is all about. But it comprises 30 stocks, much like the Dow Industrials.
So it's not a very broad measure then, again, like the Dow, because you looked at the S&P 500 to get a broader feel of what's going on. So it's similar with the Sensex.
Yeah, precisely, because you'd appreciate that way back in 1986, when the Sensex came into being, the number of stocks on the Indian markets were not very many. So at that time, it was probably representative, just as I'm sure the Dow was quite representative at the time that the Dow came into existence. Yes, it is not very representative in that sense, but it is one of those leading sort of sentimental indicators, if you will, of how the markets are performing. And, the stocks are pretty much across all the sectors of the economy, but again, it's just one or two stocks in each of the sectors.
And what about the weighting of the stocks? Is it a weighted index, or does one company move it a bit more than the others?
Yeah, it is weighted. The companies are given different weights depending on their market capitalization, and depending on how the prices move, then the Sensex moves in relation to those weights. Easy to trade? Yes, it is quite easy, not too difficult.
Okay. Now, if we have a look at the sectors in India, which of those sectors have a strong multinational presence, and which are the leading multinational stocks in the country, would you say?
Well, if you look at the stocks that are listed among the multinational companies, there are three sectors where you find a kind of concentration. One is in consumer goods, where you have companies like Gillette, Unilever, Nestle. The other is engineering, where you have companies like ABB, Siemens, Ingersoll Rand, and finally there are the pharma companies, your GlaxoSmithKline, Aventis, and Pfizer, among others. So these are broadly, if you look at the listed counters. But of course, we've got a large number of multinationals that are not listed on the stock exchanges, ranging from your Citibanks to Standard Chartered, as far as the banking sector is concerned, to many of the IT companies, as well as insurance and telecom players. So as far as the listed companies go, these are the three sectors which you would find the bulk of the multinationals in. And having a look at some of the Indian companies, over here when the FTSE 100 moves, everyone looks at what Vodafone's been doing, what BP's been doing, because obviously they're two of the biggest UK companies. I mean, what are the companies in the Sensex, say 3-4 companies that everyone looks to see what's going on? I suppose the bellwether companies, I guess. That's right. And in the Sensex itself, the only real multinational to speak about is Unilever. Most of the other 29 stocks, or most of them at least, have very little multinational element to them. And they are sort of Indian companies, yeah. And which companies would those be? I'm trying to get a feeling of when the market moves, what companies do Indian investors look at to see what's been going on? See, basically, the largest of the companies, which is also India's largest private sector company, is Reliance Industries. And it is the number one stock in the country. Reliance is, in a sense, the bellwether stock, if you will, on the Sensex. And depending on how Reliance moves, it has a huge impact on how the Sensex itself moves. Apart from that, we have a bank called ICICI, which is one of the largest banks in the country. We have State Bank of India, which is the largest bank in the country. The other major stocks are what comes to the mind is the Tata companies. Tata Steel, which of course has been in news in the UK for the takeover of Chorus. So Tata Steel is another key stock in the Sensex. as is its sister company, if you will, Tata Motors, which is in the news for
the $1,000 car
on Jaguar and Land Rover. That's right. Yeah.
Okay, interesting to get a feel for how the index is made up. In terms of sort of a comparison to multinational stocks in India and the Indian-based stocks, which have performed best, would you say, over the last couple of years or so?
Well, certainly I think the multinational stocks have underperformed in terms of the Sensex. Part of the reason for that is they have been in sectors which have not been too hot. For instance, in consumer goods have been going through a pretty bad patch. So you have shares like Unilever, which have completely underperformed the Sensex, despite the stupendous rise in the Sensex over the last 2-3 years. Also, the major multinational pharmaceutical companies, GlaxoSmithKline, Aventis, and others, have also not done well simply because the sector itself has been out of favor with investors. So if you look at from that point of view, multinational stocks have certainly not delivered good returns in recent years compared to, say, many Indian companies. But those Indian companies have again been in sectors where it's been kind of fancied, like capital goods sector or information technology before the recent slump.
So those have been those are the two sort of hot sectors, or have been the hot sectors recently, would you say, within the Indian market?
Well, information technology has fallen off quite a lot in the last 6 months or so. But if you look at engineering, it's done extremely well. Reliance Industries itself has, more than doubled in price in the last year or so. And banking has done extremely well as well. It's important to understand that, the Sensex took 20 years to go from, say, a base of 100 to 20 to 10,000 points. That is between 86 and 2006. And then from 2006 to 2008, it kind of pole vaulted from 10,000 to all the way to 21,000. So what took 20 years to hit 10,000 points in the first, period, in just 2 years, it more than doubled that, which is what, was part of the problem, because that's the kind of you can't sustain that kind of growth, obviously.
No, that's an incredible.
Paying a bit of a price for that at the moment, yeah.
Incredible move. But the thing is, everyone's paying a price for what's going on, what has been going on in the markets. It's not just India, is it? The US, the UK, everywhere seems to be. When we look at actually buying and selling shares in India, are there any tax rules that we should be aware of?
Essentially, there is a capital gains tax, but again, this has been liberalized quite recently. The long-term capital gains has been removed completely. So if you hold a share for more than a year and then sell it, you don't have to pay any capital gains tax at all. Which is quite a remarkable thing in itself. The other is we have the short-term capital gains, which is that if you hold a share for less than a year and then you sell it, you pay 20% of whatever gains you make as capital gains tax. Apart from that, of course, there's something called the securities transaction tax. Every time you buy and sell a share, 0.125% is taken off as securities transaction tax. But, broadly, these are the two kind of taxes that govern the purchase and sale of shares in India.
Binu Thomas, International Editor of financialradio.co.uk, based in Bangalore. Thank you very much for joining us today.